about the big order wins for RK Forgings. We have with us Lalit Kumar Khetan, the ED and CFO of the company, joining in on the show right now. Lalit, hi, good morning. Good to have you on the show. You've received contracts worth about 220 crore rupees during the third quarter. Now with another 75 crore rupees worth of orders per annum, how does your revenue outlook change for the entire fiscal year?
Yeah, the revenue outlook looks quite strong for the fiscal year FY23. What we are looking at FY22, we are looking at least 25 to 30% growth for in FY23 in terms of top line.
Okay. I also wanted to understand this, 75 crore rupees of orders that you've newly added. Are the contracts at higher margins, and will these new contracts be recurring in nature?
It's what we announce on the to investor is the contract what we are doing the new product development or new customer order from the new customers. The recurring orders those are the regular orders we do not normally announce, and these are the orders which add to further to the top line. But however, pricing formula is already fixed with the OEM, so the margins are similar to what we are getting with the old orders.
Mr. Khetan, let's also understand how demand is shaping up for the company, at the moment, domestically as well as globally, because you have a strong order book. So will there be any working capital crunch?
No, not at all, because there with the elongation or there is increase in demand, there is certainly elongation in working capital, but the company has adequate cash available and lines available to meet its extra working capital requirement, and that will not a challenge at all.
What is your outlook as far as exports are concerned? Do you think that you will continue to build on your order book there? Can you walk us through some of the recent orders bagged?
Yes, certainly. We are quite bullish on the export demand, and the company is focused on increasing its wallet share on the export side. And till 2020-21, we used to do a 30% exports of our total sales. Now it has increased to more than 40%, whether we are near to 45% of our total sales. And target is to have a 50% wallet share of exports in our total sales by next year.
Sure. Lalit, also wanted to understand, sequentially, one has seen a decline in your margins in the third quarter. How is it that the margin picture can now shape up with the addition of these new orders and the kind of strong visibility that you have on your top line specifically?
See, margins are a function of product mix and basically a little bit impact on the export and domestic mix also. When you have more exports, your margins tend to be a little higher. But the margins right now, what we've achieved is going to be sacrosanct, and the 23% EBITDA, what we are achieving for last 3-4 quarters, we are going to maintain that, but we are trying to improve upon that. There are pressure on the cost side on the commodity, but in our case, all the contracts, the commodity prices are passed through. So that's why we are successfully able to maintain this kind of margins. And endeavor is to have by various means of cost saving and others, and achieving the economy of scale through the higher production, try to improve upon that. And that's the constant endeavor.
The other thing I wanted to ask about, Lalit, was also whether or not you have any exposure to China, given that, many cities there are going into lockdowns. There are restrictions at Chinese ports as well. Wanted to understand if you have faced any supply related disruption.
No, we have absolutely no connection with the China in terms of any supply, sales, or by both sides.
Also marked your entry into the EV space. You signed an MOU with ePropelled in the United States to jointly develop e-axle products. With the EV range currently ongoing, can you tell us how this partnership is going to aid your top line and how you expect to propel the overall EV thrust?
Yeah, this partnership is going to go a long way in our EV endeavor, as we want to just not focus on our current product line and rather want to grow on the EV side. And right now, the product developed by the e-propelled are under validation with customers. Once that is validated, we will start to put up our manufacturing facility also in India and start supplying to our customers. And this can give us a target sales of around 5,000 crore in next 6-7 year time.
Okay, you did flag off margins going forward, but give us a sense as to how you expect your sectoral mix to shape up in terms of what the breakup is going to be with auto and the other segment, and how that's going to aid your overall revenue growth.
Yeah, we are trying to de-risk ourselves from the cyclical nature of auto industry a little bit and focusing on the other areas like fabrication of the product component for the other industry like construction and mining industry. We are also developing product for the oil and gas and tractor. So all these will help us to improve our mix from auto non-auto currently at around 85 auto, 15 non-auto to 70 auto, 30 non-auto. So that will help us to take care of this cyclical nature. And when there is a dip in demand, I think we can much better maintain our top line.
Sure. Thanks so much for taking time out and joining in, Mr. Khetan, and giving us a view on the business outlook.